Hello students, once again, welcome to the Blues Talking Memo. I'm extremely sorry as it's probably been a month since I've not posted any new video. Actually, I have been really busy due to some personal commitments that's why I wasn't able to do so. I'm extremely sorry for that. And as you know, students, we are studying the accounting principles, and underneath accounting principles, there are accounting concepts and accounting conventions. So today we'll be studying about the sixth accounting concept, that is the matching concept. Let's talk something about fashion first. As you must have heard from the female member of your family that they always say that it's not going well with this outfit, is not going well with these shoes, or the accessories should be matching, the outfit should be matching. Although nowadays a contrast is also okay, that's also accepted in the market, but some women are really conscious about matching. They say that their handbag should be matching with their shoes, of course, and also their shoes would be matching with accessories and everything else. So, what is this matching? Why they do matching? Do you know that in order to look trendy, of course, in order to be fashionable, be trendy, and in order to look good, of course. And likewise, in accounting, there is the concept of matching. That's the matching concept. So, what's the matching concept in accounting? Let's talk about it now. What is matched? After watching this video, you will be able to know that what is matched in the accounting and what's the purpose of matching, and for which period one thing is matched with the other thing. This is basically all about the matching concept. First of all, what is matched? As you know, what's the purpose of business? Purpose of any business is to earn profit and to generate revenues. And what's the profit? What the profit is basically? What's the profit? Profit of any business. As you know, what the profit is? Profit is revenue generated by the business minus cost of doing business or expenses of business. So in order to earn the profit, these two things should be matched. How they should be matched? Basically, the matching here means the subtraction. These two things would be taken into consideration, and then after that, the revenue of any business will subtract the cost of doing that business. That would be equal to the profit of that business. Okay, that would be equal to the profit. If you are doing a goods business, of course, then the cost of production of goods and also the cost of sales would be the these would be the cost of doing business, cost of sales, cost of production of goods and everything else. And the revenue is, of course, which is generated principally by the selling of goods in any business. But if you're doing the services business, then the cost of producing services or cost of providing provision of services would be subtracted from the revenue earned by provision of those services. So this is the profit basically. So what is matched? It's the revenue or cost of doing business is matched in order to ascertain the profit. So why is it matched? In order to ascertain the profit. Now there comes the next thing. Then what's the period of matching? Number one is the profit. Number two, the period. What is matched and the period for the same period. So the revenue and the cost of doing business for the same period would be matched. For example, let's say this is 2005 data, the revenue of 2005. In order to ascertain the profit of 2005, would subtract from itself the cost of doing business of the year 2005. So, is it clear? Next point comes the period. So, according to the going concern concept, and also according to the accounting period concept, as a business is the going concern, so the accounting period, as a business is the going concern, we would consider that after each period we need to stop. Usually it's after 1 year we stop in the business. Let's understand it with help of an example. Let me rub this off first. Let's consider there is a company ABC Limited that's doing the IT business, for example, and there is XYC company marketing company. That's basically the market company, let's say. This is the marketing company and this is IT company. So the IT company ABC Limited pays sum of rupees 10,000 for the period of 2 years for marketing expenses to this company. This is 10,000 for the period of 2 years for marketing its products. We are preparing the balance sheet of this company or the accounting records of ABC Limited for current year. So while preparing the current year's records, we would say it's after the time span of 1 year. For example, in January 2000 and in January 2018, it paid to this company the sum of rupees 10,000. In December 2018, while preparing the record or balance sheet of this company, we would say that rupees 5,000 is marketing expense, basically in the profit and loss account, because these are the expenses. And what about the remaining rupees? 5,000 is deferred revenue expenditure. Deferred revenue expenditure, because the nature of capital and revenue expenses from the chapter of capital and revenue expenses. And again, the concept of revenue and capital expenditures and receipts is taken into consideration, like the two previous concepts of accounting period concept and the going concern concept. So now you know that what is matched in the accounting. In order to calculate the profit, the revenue and costs of doing business in any business are compared. It means these are matched basically. And why we use the word matched? Because these two things should be for the same period. For the period should be matching basically here, and also the profit should be also the same year. In order to ascertain the same year's profit, we would minus the cost of doing business from the revenue of that business. So for this ABC Limited, this rupees 5,000 at the end of the first year would be the marketing expenses, and the remaining 5,000 would be shown in their balance sheet as a deferred revenue expenses, because they would take the benefit of it in the future. I hope guys you like this lesson. I would also provide the link to my previous videos all the previous accounting concepts in the description box. If it's been useful for you, then please like it, share it with your fellow students, and also subscribe to my channel. And please don't forget to share it with those who might benefit from it a lot. Thank you so much. Thanks for watching. Take care. Bye bye.